Welcome to my second ever live stream. Let's hope this goes well. I'm Diane, and I am here to discuss when will home prices drop. So before we get into that discussion, I want to give you a quick market update. The data is courtesy of Altos Research. So the other day I attended a webinar for industry professionals. And if you can't hear me, let me know. And it was really informative. And before they began the presentation, there were about 100 professionals in attendance. And they asked, have you had the forbearance conversation with your clients? Meaning, has anyone come up to you and said, hey, I'm in forbearance, I can't get out of it, I need to sell my house? And 87% of them said no, they had not had that conversation, and 13% of them had said yes. So I thought that was kind of interesting that those numbers were so low. In the industry, people are guessing, this is just guessing, rumors, that forbearance may be extended to June 30th, which also happens to be the peak of the traditional spring season, selling season. So usually we start off the year in January with about 1 million single family homes for sale. But this year we've only started with 396,000. So this whole last decade, inventory has been shrinking, except for the end of 2018, where it did start to tick up because interest rates were starting to rise into 2019. Probably by February, they're guessing that we're going to get down to maybe 380,000 single family homes nationally for sale. And then after that, the inventory is going to go up. So we're in a low interest rate environment, and we have been for the last 10 years. And this has been the biggest factor for growth in the housing market. 2010 was also a year where a major trend was moving to rentals. So a lot of single family housing stock was taken out of the buying pool and put into the rental pool. And this was via both individuals and institutions. And it's estimated that about 11 million homes were taken out and put into the rental pool. In 2018, the rental pool had gone up to 18 million homes. So that's kind of interesting. What people are doing, it seems, is that they're keeping their first house if they move on to a second one, because interest rates are so low, they can refinance and they can cash flow and rent out the property. If we get to a point where rates go above 4%, that's probably when you're going to start to see a significant slowdown with more inventory coming onto the market. And this is consistent with the 10-year cycle that we're in. For example, in 1992-93, that was kind of a lull after a high where prices came down and softened, and then they started the march upward again. The same thing happened in 02 and 03 after the whole dot-com bust. Prices kind of softened a bit, and then they started picking up steam 2004 and on into 2008. So it's kind of likely that 2022, 2023, if we remain on this 10-year cycle, we're likely to start seeing maybe some changing in prices. Maybe they'll slow down, maybe they'll soften up a bit, depending on what the government does. This year, we're expecting to see our normal seasonal pattern, which again is January, prices are the lowest, inventory is the lowest, spring, everything goes up, it peaks in the summer, and then prices and inventory start to come back down into the holidays where everything takes a rest. We're not expecting another COVID V-shape interruption like we had last year, because now at least we have vaccines and we kind of know better how to live with this virus. It will probably take 3 to 5 years of rising interest rates to see any kind of normalization of inventory given our current dynamics. New listings are an interesting leading indicator to look at of pricing going forward. It's kind of the wisdom of the crowds. So if you're a realtor on the ground with clients and you have a seller and they need to sell, you're going to list that house strategically. So if it's a rising market, you might price it a little higher to test the waters. If the market's going lower, you might price it even lower to kind of get ahead of the curve. And it's those people on the ground in every community across the US, the realtors who kind of know the day to day. And so they're setting the pricing strategy. Altos is actually thinking that given what's happening this year, we may see another 8 to 10% appreciation, which is pretty robust. Right now, NAR was saying that the median list price for December 2020, they noted, was 13.4% above the median list price for that same month last year. So people are definitely more confident about pricing and they're going up. Yeah, anyway, and that appreciation, 8 to 10%, that's if interest rates remain low. Let me just add that, if interest rates remain low. Hey, Jack Pile. Okay, another interesting indicator to look at is price cuts. And typically in any normal market, about 33% of sellers will take a price cut at some point in the transaction. You know, either usually because they priced it too high and they sat around for a while and nobody bid, and so then they had to lower the price. And this happens in a seasonal pattern. You'll see more price cuts in the late summer and into the fall than you will early in the season. But this whole past year, only 22.3% of sellers took any kind of price cut. So that is significantly below the 33 to 35% we're used to seeing. So that's another indicator of a strong market ahead. So yeah, no seller price cut means demand is high. And this is one reason I really love the data from Altos Research, because they focus on the active market. They're belonging to all these MLSs all over the US, and they're looking at what's happening now versus NAR and some of the other big economic reporting agencies that look at it a year later, not a year later, a month later, So this is the now market. The average days on market is settling into a normal pattern, but it's just in a crazy hot market. A lot of metros have just crazy low month supply of inventory, less than a month for some, less than 3 months for many. Normally it's less than 6 months is a seller's market. And so there are a lot of places that are far below that. So basically, we have strong housing demand likely coming into the next decade, basically. The millennial cohort is bigger than the boomer cohort now, and they have delayed home buying. They are now hitting their 30s and 40s, and they are in that family building mode. So no matter what happens to interest rates, there's going to be some huge chunk of these folks that are going to buy homes anyway, because that's just the stage of life that they're at. The other thing is that boomers have held onto their properties a lot longer, like I said before, because it's cheap to do so. However, there's a cohort of them entering their 70s and 80s where they may start to release inventory. So there's some big generational tailwinds that are powering the market. About those boomers releasing inventory, there's this notion of the silver tsunami. And I did a little napkin math on that, and I don't think it's the big deal that some of the headlines have made it out to be. There are roughly 24 to 48 million millennials who are in that category of home shoppers, and they're going to be chasing after 12 to 14 million of these boomer homes belonging to boomers in that 70 to 84 age category. So however you slice it, there's still a bunch of millennials chasing after fewer boomer homes. And so demand is going to be high and inventory tight for a while, barring some unforeseen crazy accident of nature, honestly. Price decreases are going down. So like I mentioned before, that's a strong indicator. Price increases, which are flippers and iBuyers, are actually are pretty high. They're showing a lot of activity. So normally in the market, nationally, 3 to 5% of any transaction is going to be, short-term holders, flippers, iBuyers, that sort of thing. But there are a lot of areas where we're seeing it up into the 10, 11, 13% range. So it's pretty high. And honestly, given the market dynamics, this is probably a good year to flip a house in a lot of places. Not every place, but a lot of places. Relisted is another thing that Altos watches, and that means like it was taken off for the holidays or a deal fell through. And right now, only 1% of homes are being relisted, which is very, very low. It's another strong indicator of demand. So basically, everything that they're tracking has a strong indicator of demand. And so the question is, when will house prices drop? And I'm going to say that given the 10-year cycle that we're in and the demographic forces that are behind us, because we still have this wall of millennials coming up on that 30 to 40 age bracket where they buy homes, I'm going to say 2021 will be up, and I've already broken that down in another video, the forecast video, which you can go watch. 2022, I'm going to say it's probably going to also be up to some degree. It may go up to level somewhere in there. 2023, maybe it'll start softening. Maybe it'll level out, sorry, level out. It might start dropping down. It just depends. 2024 may be the year where you finally start to see a little bit of a relaxation, unless the government continues its stimulus. And that is the wild card in all of this. There is so much government stimulus, and there's more coming. And yes, not all of that makes it out into the economy, but a lot of it is making it out into the economy in the form of higher housing prices. And the Federal Reserve has said they're going to keep interest rates low until 2023, which is another reason to kind of watch that year. If they really do keep it low till 2023, the market's going to be strong until then. And then when they start to hike it in 2023, yeah, that's when you're going to start to see things loosen up and slow down and maybe become a little more normal for the average buyer. But then again, we've got that wall of millennials coming through. So that's kind of that's my take on it, on the market at this point. And before we get into any questions you might have, I want to let you know about a little project I'm working on. I'm actually conducting some market research. I'm reaching out to buyers and sellers in the market to understand their kind of pains and frustrations in the market so that I can create better content for my channel. So if you want to chat, it's really easy. I have a Calendly link below. It's like a half-hour call, and I'll ask you a series of like 15 questions. And then at the end, if there's anything you want to ask me about the market, your personal situation, because there's a lot of times when there are particular details that you'd love to discuss with someone, but you can't really put it in a comment on the internet, then feel free to set up an appointment. We'll go through my questions, and then you can ask me anything you want. So, okay, let's look at the questions here and see what we've got going. J Baby. Okay, hey J Baby, nice to see you. Will prices drop or will they gradually decline over time? Yeah, I'm going to say gradually decline over time. This is kind of how the housing market is. I mean, drop is kind of a dramatic word. I mean, how do you even define that? I've seen different definitions for drop, 20%, 30%, 50%. I mean, yeah, sure. And after 2008, prices dropped, but it took them, from 2008 to 2012 to really bottom out. So it's a general decline. What you will see when the market is changing is the unit sales will slow down. So watch the unit sales. When you start seeing signs of, okay, there aren't as many multiple bids and there aren't as many units selling, unit sales, when they decline, prices typically start declining after that, but it can be a year after that. So it's kind of slow, like molasses. Jack Pile, better to buy crypto or homes with a 7-year outlook? Okay, listen, cryptos are a speculation, okay? And real estate is a traditional conservative investment. So, if you have $100 and you want to play in the crypto world, sure, put $10 in there. 10% speculation, 90% investments that are going to pay you to hold them. So that's just, everybody's situation is different, but generally just keep in mind cryptos are very speculative, and real estate investing, you don't always win. Sometimes you lose. You gotta, you gotta time it well and hold it well. But yeah, I'd rather buy real estate for 7 years and I'd buy a little crypto. I do both, actually. Okay. Jen Smith. Hi, Jen. Will inflation be a factor for the real estate market in 2021? Ooh, that's a really interesting question. In general, I think yes. For 2021 specifically, not sure. Um, I generally see that the government stimulus is creating more and more money and more debt out of thin air, and it's making its way into the economy, and that is leaking out into the prices of things. I think the consumer price index is kind of misleading because it doesn't account for energy, housing, and food. Those are like the three things people need to live. It accounts for all this other stuff. So I do think inflation is going to be a factor this year. I think it's leaking out into housing. I think that's why I think real estate is a long-term good investment at this point. Now, I'm not a housing cheerleader. I've been that in the past, and then I got squashed in 2008. So I learned my lesson, which is why I started studying macroeconomics and the greater picture that we're operating in. And just looking at where we are, you still need to get a good buy, but it's a good hedge against inflation. Summer day, hello, welcome. Okay, so here in the Central Valley of California, prices are going up, bidding wars, little inventory, it's crazy. My kids just bought a huge home on a golf course outside of Sacramento, closer to Sacramento. Nope. Yeah, it's crazy out there because it's affordable. I have a friend that, she works in Oakland and she moved to Manteca because she could afford a house. It's tough. That's a tough situation because there's a part of you that doesn't want to jump into any kind of frenzy because you feel like I'm just going to get ripped off bidding against all these other people. So sometimes there are ways around that. You can wait, but then the problem is if you wait this year and prices do go up 8 to 10%, like Altos predicts, then you're having to pay more next year. Another option is to go into something smaller than your ideal home. Maybe you go into a condo instead of a 3-bedroom, 2-bath house as just a way to get in and not lose out because later you can sell it and trade up. Or you can pick a place that's like the Central Valley, which is maybe out. Maybe it's out in Linden instead of Stockton, or although I think Linden's kind of expensive, but something like that where you're just out further. And with the work from home environment, that kind of thing might be easier to do, lifestyle wise in the past. But yeah, you have to, this year, if you want to buy a house, you really have to be committed to it. You have to know you want to do it for some reason. And it's not the best thing for everybody. Sometimes it's better to rent. It just depends on your life situation. But if your life situation is such that this is the year you need to buy, it's battle. You're going to have to go to war. I mean, get a strategy, get a good realtor, get someone really proactive, talk to your lender, get your ducks in a row, get your love letter out that doesn't violate fair housing laws. And yeah, it's going to be tough out there. Okay, Liberty returns. The controllers use the housing market as a form of modern slavery. Mortgage equals death pledge in Latin. Yep. It's sad what's happening here in Utah. I'd love to hear more about what's happening in Utah. I'm guessing people are coming in and driving up prices, but tell me more, Liberty. Yeah, and I don't know if the controllers are that organized, honestly. I don't know. It's maybe debatable. Jen, will credit be harder to come by, or will down payment requirements increase? Will it be harder or easier for people to buy? Okay, that's a bunch of questions all in one. Hey, Christina. Okay, will credit be harder to come by? I think I don't really have a sense of whether it's going to be harder or easier. My sense is it's going to be about the same, unless something happens behind the scenes. I mean, right now they're pretty, they look at everything. They want to make sure you have a stable job, especially with COVID. Like, it's not uncommon through a transaction for the lender to want to talk to your employer, 2 or 3 times, or at least get a letter 2 or 3 times, even right before close, making sure that you still have your job and that it's safe. So, they're not being reckless like they were, back in the day in the mid 2000s. I think if the Federal Reserve keeps buying mortgage-backed securities, then yeah, it's going to be the same. If they pull back on that for any reason, which I don't see why they would, then it might be harder to get credit. So that's not a perfect answer, but oh, there was another question in there. Will it be harder or easier okay. It'll be harder for people to buy in that it's going to be harder to find a house. Okay. Even if you're selling a house and you want to move to another house, there are a lot of sellers that aren't moving because they don't see any other house that they like, and they're afraid that if they get into contract, they're not going to find something they like. So there's a little bit of that right now. I think as the spring opens up, I think some people who have waited for whatever reason, maybe because of the COVID or vaccines or whatever, they may open up, and then some inventory may open up. It's really an inventory problem right now versus a getting money problem, assuming you have the down payment and a stable job. So yeah, Liberty returns. Okay, do you feel that it would be better for everyone in the long run if prices come down enough to make sense with the average? um, sure, that would be better for everyone, and that would make sense. I think the problem is we have so many government interventions that there're just so many manipulated markets that price discovery, true price discovery, is becoming a problem. And so we have these distortions all over the place. And I know that's why some people root for a collapse, because if it just all the house of cards all fell down, people could just pick up and start over and discover prices, in a free market versus a highly manipulated market. Don't trust employers. Jobs are never safe. This is Christina. We are disposable. I find people purchased with inheritance money. Tell me more about people purchased with, oh, you mean in the market, people purchased with inheritance money? Yeah, I do. About trusting employers. Yeah, you can't 100% trust them. I mean, I guess it depends. I mean, if you work in the government and you have you're getting all the budgetary money you need and nobody ever gets fired, then maybe you're safer. But, yeah, out in the real world, it's not always safe. I mean, I lost my job and I thought it was pretty secure. I mean, lenders gave me money based on this job, and it's like, okay, I don't have it anymore. So yeah, you just can't trust the job market 100%. Summer Day at Liberty, Idaho is one of the top states for buying cheap property. I don't know, not in the northern part. It's pretty pricey up there. So no, it will change as the market has already changed, and the locals up there can no longer afford even a mobile home. Yeah, it's this year people have been moving from the coast into the interior. I mean, we went up and drove through Idaho and Montana this fall to visit family, and we actually had friends here that moved from Tahoe to Hope, Idaho, just because it was more affordable there. And so a lot of people are doing that, and it is hard for the locals. Although in the area where she moved, a veterinary technician can still afford a house. And that's awesome, because pretty much, it'd be nice if any teacher, vet tech person with a normal job could afford a house. Yeah, but these distortions are bleeding out, and with people running to the interior of the country, it's just going to start happening there too. So yeah, Christina says, yes, it was inheritances. Yeah, that's an interesting thing to consider too, because those baby boomers in that 70 to 80 plus range are at some point going to die, and their houses will come up for sale, or their inheritances will go down, most likely to millennial children who then may be able to buy. There's about, I think 1/3 of millennials actually own a home. I looked that up. So, they're not all living in the van life. Government jobs are not safe anymore. It used to be, says Christina. Yeah, I would say if you're the federal, correct me if I'm wrong, I would think if you're the federal government that you're pretty safe because the feds can print the money. But yeah, if you're state or local government, yeah, maybe not so safe. I don't know. If you have a comment on that, let me know. Rocket Tap, buying cheap is good, but where are the best locations for appreciation and or profitable rents? Oh yeah, that's a big loaded question. I mean, if you're looking to put money into a real estate investment as a landlord, I would probably look for towns probably in the interior of the United States where people are moving to, so I would look at places in Texas, because Texas has seen a huge influx. Excuse me. I might look in Idaho. I would look in Montana too, interestingly enough, because I just seen on YouTube the interest in Montana and living in Montana is huge. Like there's this real estate channel, they're just realtors, and they just do little videos about living in Montana, and they have been getting huge views on these things through COVID. So I would be kind of looking, I'd look at the whole U-Haul thing, like the U-Haul report came out, and I think Ken McElroy did a really good rundown on it. And Tennessee has been a really popular place for people moving during COVID. So I think I would first look for kind of those trends to see where people are moving, but I would also look for the jobs, of course, and the economy and the schools and whatnot. Although I would not look for college towns as much as I used to, because it used to be if you're an investor, look for college towns because there's always a good economy around that, students coming and going. But honestly, since COVID, I think universities might start to struggle because people realize they can learn online from home. And tuitions are so expensive. I mean, they're so expensive. What are you getting as a parent for that investment, right? So I wouldn't necessarily look for university towns until colleges fail, and then maybe I'd go in with blood in the streets, that whole thing. But yeah, that's a big loaded question where I'd look at the economy and I'd look at the cost of living, and I would look for places where normal people can still afford to buy, because people are most likely to move in there and drive up prices. Priscilla Matthews, land investment. Land. Okay, that's not a lot of detail for a question, but land is interesting. It's a safe place in a way. It can be very speculative. Like I've known people who bought commercial land in the path of progress, and it's just sat around for years and they couldn't do anything with it, or it wasn't worth it to do anything with it. I think land in the path of progress where things are really developing can be a good investment, and it just sits there and you pay property taxes and you don't have to deal with tenants. So it's good for like just holding wealth. It doesn't really earn you any income unless you're putting trailers on it and renting those out to people. So land can be good. A ranch, farm, like if I had the money, I'd totally buy a farm. I think it's good to have a farm in these crazy times. So, okay. Christina, you have an excellent point with federal jobs, but I've been told you get tested on a regular basis, which is harder to keep the job, especially when you are lucky to get the job in the first place. Oh, well, yeah, sure. I mean, if you're going to have a federal job and they're going to test you, I guess you better stay up on, what it is you're supposed to be doing. It's not like Homer Simpson just sitting around eating the donut, right? Okay, Jen Smith, property taxes are going up in areas people are moving to. Oh, that's interesting. My town says we have to build new schools, hire more police, firefighters because the population is expanding. Oh, Jen, that's a really good point. Yeah, so how is that done though? Don't they have to pass that by the voters, and are the voters supporting it? I'm kind of curious about that. And then how high do they go up? I mean, property taxes, I don't know, from what I've seen in property taxes, they don't typically get hiked up too much by the voters, but yeah, it'd be interesting to know, because you're right, all of that's, I mean, like here at Incline Village, we're just a small resort town. We had a bunch of people move in, and the schools suddenly have more students and there's just more resources required, and yeah, it's been a challenge. Okay, Summer Day, you were right about the North. I live part-time in North Idaho near Sandpoint. Not much inventory and it is pricey. Glad I bought 20 years ago. Yeah, Summer Day, I wish I'd bought 20 years ago too. So yeah, good. Well, hey, does anyone have any more questions, or I'm gonna wrap it up? Okay, all right. Well, this is great. Thank you very much for showing up. This is exciting. And yeah, if any of you want to participate in my little market research survey, one more. Geek Elite, who is moving to California now? Dropping prices? Geek Elite, that's a really good question, because I know there's a ton of headlines like everybody's leaving California and they're all jumping ship, but there are other people coming in too, just not as many. And I don't know who they are. They're probably coming for jobs or to be with family. I'm not sure. That's a really good question. Something I have to look into. But yeah, people are still going there. Weather. Okay, guys, I'm going to wrap it up at the half hour here. So if anybody wants to participate in my market research survey, I'm going to drop the link below, and you just pick a time that works. And then after I ask you my questions, You can ask me anything you want about your situation. I'm happy to help. And yeah, thanks for coming. I really appreciate it. You guys take care.